Corey,
Austin, how you doing?
welcome back, my man. It's been a minute.
It's been a minute and welcome everybody. It's we missed all you guys as well.
Yeah, we've been we were doing these little videos pretty consistently, and then I think we most of Q1 and Q2 we switched over to just putting out investor letters each month, and we got a lot of feedback. People were like, "We want to hear you guys talk about crypto." So we're bringing it back today. We got some interesting topics to talk about. It's a lot going on in the world, in the marketplace, with
Definitely.
crypto, with regulations, with finance in general, all kinds of stuff. So should be a fun conversation.
It should be. And for some reason everybody actually wants to hear us talk. I guess that's I guess nothing wrong with that. I guess maybe we
Yeah,
know what we're talking about. So
cool, man. Well, let's dive in.
definitely.
First topic I want to talk about is really kind of what's been the breaking news lately, and that's Trump's big beautiful bill. So
Oh
I
yeah.
think it's kind of funny that he called it that, but um, for what it's worth, I mean, 50% of the pundits out there will say this is the worst thing that could ever happen to the US debt and our economy and everything. And then 50% of people are optimistic, saying this is going to be incredible for growth. Regardless what your political stance is, one thing we do know is that the money printer is about to get turned back on.
Hmm.
And every time, if you look back in history, since the beginning of crypto, since 2009, when Bitcoin came online, every time that has happened, Bitcoin correlates with global liquidity almost exactly. It's like 85%.
Absolutely.
So basically, what that means is as the money supply increases, as governments around the world start printing more money, Bitcoin goes up. Naturally, it's what you would think would happen, but to see the charts of how closely correlated that is, it really kind of proves that out. And personally, as an investor, as a co-manager of Pivotal Point, I'm excited anytime they start printing money because it means Bitcoin and crypto is is going to go through the moon. So, what are your thoughts on this? What do you see kind of in terms of asset prices moving forward?
Yeah, definitely. And, we're not going to get into the political aspects of the bill. We definitely respect everybody's political opinions. And, that's what makes this country truly great is everybody is able to have their opinion. But one thing is for sure, when it comes to spending bills, the only guarantee that we can have as Americans is that taxes are going to kill us and our businesses and our income, and the government is going to always raise taxes, tax this, tax that. They're going to print more money to to back up whatever spending that they have to do. And we don't want that to happen as an economy in terms of, it dilutes our dollar value, but we can almost guarantee that it's going to happen. And the best thing that we can do is be prepared by holding assets. So whenever the money printer goes on, unfortunately, that ends up hurting people that don't own assets. Because if we were to print more money, what that does to the value of each dollar, it makes it less and less and less. So, what we want to do is we want to hold not just an asset, but we want to hold a hard asset. And Bitcoin is the best asset in the world. It's the best asset that man has created, in my personal opinion, and same with Austin's, which is why we started this fund. So, with the amount of spending that the big beautiful bill is going to be doing, there's no choice but to print money. They haven't really talked about that, but we know that it's coming. One of the reasons why asset prices after the pandemic took such a, it took off is because we printed more money in that 4 year time period than we've had circulating. 40% of the entire M1 money supply circulating after the pandemic was printed in that short amount of time. And that really hurts the value of a dollar. That's why we saw inflation go up so high. But anybody that held assets such as real estate, stocks, crypto, gold, their net worth doubled and tripled in a relatively short amount of time. And we feel
Yeah.
like it's coming again very soon. And the reason why Bitcoin is taken off so much, and we've talked about this in previous videos and emails and letters, is because of the ETF. That's really the only thing is the ETF had capital inflows of, 50 billion, $60 billion, more capital inflows than gold has ever received or any ETF has ever done. And BlackRock and some of these other big asset managers were able to purchase it. So we feel that with quantitative easing, which is what happens when the money printer turns on, that is going to happen with Bitcoin and other alternative assets in the coming months, in the coming years as well. But one thing that we've been waiting for is we've been waiting for interest rates to lower.
Yeah.
And that's really the fuel that's going to ignite the fire. So there's and you don't have to watch the news every single day to know that there's a big feud going on between Jerome Powell, the Fed chair, and Donald Trump. I don't know if they dislike each other, but they certainly don't respect each other in this in the terms of what they say about each other in public. But Jerome Powell has not lowered interest rates. Okay.
Yeah.
And interest rates typically are raised, for those that don't know, they're raised in order to curtail inflation. Now, inflation is back down in the 2% range, which is typically what the Fed likes to keep it at a year over year level. And when that usually happens, there's a reduction in interest rates. So, with inflation where we want it to be, you would think that the Fed chair would lower interest rates, and he hasn't yet. When interest rates become lower, the cost of money becomes cheaper, and then debt is able to be used to purchase assets, which cause asset appreciation. So, what we're looking at is one, we know already that the M1 money supply is going to take off because the Fed is going to print a lot of money with this big, beautiful bill. But if you add that with the quantitative easing that's going to come with an interest rate reduction, I would imagine, if I were to be a betting man, that the next real big spike in the market is going to come when both of those happen together. So when the Fed lowers interest rates again after the money printer gets turned on, we could see a pretty big increase in Bitcoin, gold, stocks, any asset prices that we're looking to have appreciate.
We could see a super cycle here. You
Yeah,
know, it's been, we saw the run up in Bitcoin from 50K to 70K to 100K, and it's kind of hovered around the 100K mark for a little while now. Uh, but a lot of people are looking at this like, is this a bull run that's just dragging, or have we not really hit the gas yet? And I think you nailed it. As soon as the money supply and global liquidity starts increasing and interest rates start decreasing, which increases which decreases the cost of capital and allows people to borrow more money. Both of those things lift asset prices simultaneously, and I think we could see a super cycle here. We could see Bitcoin possibly 2x, 3x even.
100%. Last cycle, if anybody goes, and I'm not going to get the exact percentages right, but in the last cycle, which was right after the pandemic, when Bitcoin shot up from 10,000 to 60,000 relatively quickly, what we saw was interest rates were extremely low, like 1-2%, and the money printer was turned on. And then just in a matter of months, we saw asset prices skyrocket.
Skyrocket,
And
yeah.
with the amount of exposure that Bitcoin has now, and the money printer hasn't been turned on, and interest rates are still high, and we've already seen Bitcoin stabilize at
Yeah.
$100,000 per token, which is insane. So once that happens, we could easily, and I was actually wrong this last video, if we recall, the prediction that we saw that Bitcoin was going to have. Austin won that bet. I lost, so I got to give props to Austin there. And I don't know if we're on the same page with this exactly, but I think we are. Once that does happen, we could see Bitcoin shoot up much higher than we anticipated.
Yeah, yeah. I think we could be looking at potentially a 200K Bitcoin this cycle. So with that, Bitcoin obviously gets a lot of the headlines. Let's talk about the altcoins, because there's a lot of those, and B, they haven't really acted in the same way that they have in past cycles. Particularly Ethereum, which is the second biggest coin by market cap. It used to track pretty similarly to Bitcoin. It just had like about a 6-month lag. So when Bitcoin would go up, there'd be about 6 months or so would go by, and then Ethereum would go up about the same percentage.
Mhm.
But we haven't seen that in this cycle, and there's a lot of things going on in the alt world with DeFi and layer twos and all that kind of stuff. Solana has really taken over as the preferred layer one token. There's new ETFs coming out where people are going to be able to invest in things like Solana, Cardano, some of these altcoins directly in their Fidelity account or their E-Trade account. So we could see, again, going back to the money supply, as more liquidity becomes available, people have more money to invest. Now they have more options to invest in. What do you think is going to happen in the altcoin market, and where do you see that going over the next maybe 12 to 24 months?
Yeah, so the biggest misconception that people have with the altcoin season is that it's over. It hasn't even started. So, and the reason why I say that is for those of you that might not understand crypto fully, every single cycle there's an altcoin season. And what that means, it's a time period within the 4-year Bitcoin cycle where all the alternative tokens that aren't Bitcoin take off and they have tremendous gains. Now, those gains also come with tremendous pullbacks, just so everybody knows. So, historically, over time, nothing's going to beat Bitcoin. That's what we feel. However, these gains become very, very aggressive. Now, the reason why people are a little worried this cycle is usually when Bitcoin skyrockets, the altcoins follow not too long after that. But typically speaking, Bitcoin generally doesn't skyrocket for 12 to 18 months after the halving.
Mhm.
You're just now a little over 1 year. And so
Yeah.
the only reason why Bitcoin is taken off the way that it has is because of the ETF. That's it. That's the only reason, and a little bit because Trump legitimized the Bitcoin strategic reserve, but he
Mhm.
hasn't actually done any purchasing or gold conversion. So that's what I say to everybody that's a little worried is, I looked at the all-time high for Ethereum, and the all-time high for Ethereum was November 21st, 2021, and the halving was May of 2020, which is 18 months after the Bitcoin halving. So,
Wow.
and typically after that is when altcoin season starts. So, altcoin season didn't start till December and January of 2021 and 2022, which was 20 months after the halving. So,
So if that theory holds this cycle, that would mean we would see alt starting to increase like towards the end of this year, early next year.
October, November is when we would see the pump, probably peaking maybe around December or January. Now, we don't always, past results don't always dictate future, results as well, but that gives us an indication. And if you look at every cycle previously, it was usually about an 18-month lag from the Bitcoin
Yeah.
halving to alt season. So we are still optimistic that some of these will hit, but we're just very impatient as investors because we see Bitcoin, tearing face, and we're wondering why the altcoins haven't followed suit as well. But in regards to the ETF and Solana, I always gave an analogy, and if anybody's ever read that, if I build a mall and I have all the spaces I rent out for business, and then somebody else builds a mall across the street and offers rent that's 80% less and the ability to scale 10 times greater than my mall, that mall is going to take away a lot of business. And that's what we see with Solana right now is we see Solana offering faster transactions, cheaper transaction fees, and more options for scalability on their platform, which is why they're seeing a lot more activity. Now, the tokenomics for Ethereum and the general infrastructure is more solid than Solana, just because the longer a blockchain is around, the stronger it becomes. Really,
Yeah.
blockchains become stronger the longer that they're alive. So Solana being a newer blockchain does offer a lot of these new features, but sometimes they have scale. Sometimes they have transaction bottlenecks where the blockchain will go down for an hour or two, or sometimes a day or two, and then the price will tank. So that hasn't happened for about a year, but it is a possibility for something like that. And that just doesn't happen with Ethereum. But Ethereum, I think, is getting, I don't even know what the word to call is. They're getting beat technologically speaking right now. And no one
Yeah.
wants to wait in line and pay $100 transaction fee when they can pay a dollar or a penny with something like Solana. And Solana ETF just got approved yesterday.
Yep.
So that is another opportunity for retail money or retail investors to pour into it and to own it indirectly through an ETF that they can buy with Fidelity or Charles Schwab. So, with that being said, we could see huge gains in Solana, but we
Yeah.
also might be early because what happens when Ethereum hits at that 18-month mark, all the projects that are built on top of it or that are associated either directly or indirectly usually pump shortly after as well.
Yeah, that's true.
Yeah.
And for all of our investors who are tuning into this, when we set up this fund, we were heavy on Bitcoin and Ethereum. We did invest in other alts as well. So we've always held Solana, Cardano, AVAX, some of the other big ones out there. But we were real heavy on Bitcoin and Ethereum. And the fund has performed pretty much exactly like we expected and like we our target IRRs. I think we're 35 to 40% a year right now before fees, which is incredible. That beats just about every hedge fund on the market. But we would be even higher if Ethereum had acted like it did in previous cycles. So I know we talked recently about reallocating some of that over to Solana.
Mhm.
What are your thoughts on like how much, if somebody's looking at this and they're investing, how much ETH should be holding versus Solana versus like some of the other alts in comparison to like your whole portfolio?
Well, yeah. Remember when we first started, we were saying, put half your portfolio in Bitcoin and take another 30 to 35% and put it in Ethereum, and then
Yeah.
the last 10 to 15 do those other alts. We actually believe that hold there you go.
This is Leo.
Hey Leo, we're gonna get more positive reviews off that cat than anything else. So,
It's
but
now a cat video, so it's going to go viral.
exactly. But I actually believe now that not being as Ethereum heavy is probably a smarter investment move moving forward. And going heavier into Solana, which is getting much better traction than Ethereum. Now it's still not as big as Ethereum, but it had a lot to catch up to. It's outperforming Ethereum, hands over fists. And I think the reason why Ethereum price is holding up so well is because there's so many old holders that believe so strongly in the project that they don't try to dump it and trade it. Uh,
Yeah.
like they do a Solana or a Cardano or an Avalanche or an XRP. So that's really what's holding the price up, but it's not being attractive to new investors because you don't hear about it as much.
Yeah.
Nothing exciting happening with it, as opposed to there is a Solana. So I would, if there is a new investor, holding 60 to 70% of your portfolio in Bitcoin is definitely recommended. And then holding, another 15 to 20% in all the alts, Ethereum included. And then once those start to get out of whack, so for example, if Ethereum takes off and it goes from $2,500 to $5,000 in a matter of a month or two, trim the fat, sell off your profits, allocate that back into cash and Bitcoin, because that's what we're doing. That's
Yeah.
exactly what we're doing. So moving forward, the biggest difference that we're going to do is we realize that Bitcoin really is the end all be all, and it's the best store of value that we've ever seen. It's held up better than anything. I mean, the Iran and Israel conflict happened, and Bitcoin retraced like 4%. If that would have happened 5 years ago, Bitcoin would have dropped down 30%. It's
Yeah.
absolutely incredible. And not to say that we won't see volatility, but I think you said this best. You said something on a post that you made maybe yesterday or today that volatility isn't the risk, missing out is.
Yeah.
You
Yeah,
know,
it really is. That's the way I feel now. It's like the way portfolio managers used to look at crypto and Bitcoin was that it's too volatile. It goes up and it goes down in these massive swings. So it's not recommended. But now we have history. We've got, 15 years now of history and data to look at.
mhm.
And if you just take the average, I mean, Bitcoin has averaged, I think it's like 65% a year. There's no asset on the planet that's even close. It's even in the ballpark of that. So yeah, you're right, man. Volatility is not the risk. The risk is missing out on the number one performing asset in the world.
100%.
So yeah, with that, let's talk about banks because this is a big one that recently got some big headlines. So the Fed chair Jerome Powell recently came out and he basically said banks can do what they want with crypto.
Mhm.
So the regulations are really easing. The cops are kind of letting off. And I think what we're going to see is some of the major banks like Chase, Wells Fargo, Citi, Bank of America, some of these big ones starting to actually custody crypto for their clients. Now, if that happens, which I think it will, what that's going to do is it's going to allow all of the investment bankers, so basically every RIA out there, every registered investment advisor who manages the millions of people in the country that have trillions of dollars in portfolios and very, very little exposure to crypto, they're now going to have this access to invest. They can buy Ethereum, they can buy Bitcoin and have it sit in their Wells Fargo account. I mean, that's really, really crazy to even think about. So how long do you think before this really becomes mainstream, having your local bank be the custodian of your crypto as opposed to some wallet or a Coinbase type of thing?
Yeah, it's huge. I don't think people understand that this actually, we say that we're looking for an ETF, which is great. We say that we're looking for a strategic reserve, which is great. But the bank, this is really what's going to, in my opinion, have Bitcoin take off. Interest rates being lowered, great. Money printing, great. But when the entire country has access to Bitcoin as easily as they do to a savings account, that makes it very seamless and the barriers to entry become extremely low. And when the
Yeah.
barriers to entries are low, then it makes it easier. Because if you ask the average person on the street right now, hey, do you want to go buy some Bitcoin? They'll be like, how do I do it? What's an exchange? What do I do? And they get really overwhelmed just with the process of doing it. And when you can just go to your local bank and do it and have somebody help you right then and there without having to pay exorbitant fees or anything like that and have them actually custody it, that's a no-brainer. Just
Yeah.
imagine if you had a Bitcoin savings account and all you did is move money from your checking to your savings account. I mean, that's where we're looking at. But what is really exciting about this is one, I think it's going to be a state by state issue. You have something like Texas just approved a Bitcoin strategic reserve, and then you have Connecticut that denied it. So, I think it's going to take a little bit of time for all the states to be able to participate in that, but you're going to have online banks and local banks in certain states that do. But with the ETF and with let's say 401ks as an example, and a registered investment advisor. Right now, there are multiple Bitcoin ETFs that every single person can buy on Fidelity and Charles Schwab right this very moment. Okay. And you will own Bitcoin indirectly. Now, those ETFs are not available for anybody that has a 401k. Not one
Right.
person is able to add a Bitcoin ETF into their 401k, which is silly. So, the 401k market in America right now is $7.6 trillion of assets.
Wow.
$7.6 trillion of assets. If 1% of the 401k market allocates their retirement to Bitcoin, that is $76 billion.
That's crazy.
$76 billion that are new money flowing into Bitcoin. And that's if you say at 1%. How many people that are young are going to stop at 1%? I don't
Yeah.
think so. I think it'll be more towards 3 to 5% for the younger generation, 1% for the older generation. But over time, the asset market of 401ks will grow. So just imagine when it goes to a $10 trillion asset or $10 trillion market for 401ks, and then Bitcoin ETFs have a 3% market penetration on that.
Huge. 300
That,
billion
that
dollars.
is absolute. And that's new money flowing in, and the Black Rocks and the Fidelities and the ARK Invest, they are going to have to acquire more Bitcoin to keep up with the demand, which means
Yeah.
it's money for retail. So that is absolutely huge. And then when that becomes available, you look at sovereign wealth funds and other investment firms that aren't able to own Bitcoin unless it's through certain regulations. And it opens up the floodgates. I mean, the ETF, we all have to be extremely grateful for that. If it wasn't for the ETF, we wouldn't even be having this conversation of
Yeah.
banking, and we wouldn't even be thinking about the 401k aspect, but now we're able to do so. And for us that are early adopters and for us that hold Bitcoin physically, that just puts us even further ahead.
Yeah. Yeah. It's crazy, man. I look at this almost like kind of how the internet developed. So like the internet came online really like mid 90s, and basically from like 95 to like 2001, 2002, it wasn't mainstream. It wasn't mainstream to own a website or to invest in an internet company. And around 2002, it exploded. It became mainstream. So things happened where the whole market got invested. And now, if you own a 401k, most of your stocks are internet-based companies.
Yeah.
Uh, so I feel like we're kind of in that same position. Like we've been in the 90s from 2010 to now with Bitcoin and with crypto. And I feel like we're moving into that like 2002 moment where all of this is going to converge. I mean, we've got ETFs, we've got the money printer about to be turned on, we've got interest rates about to be lowered, we've got banks about to start promoting it. Like the catalysts here are just massive. So I think I've always been a little more bullish than you, but I think we're going to see a super cycle here.
I I'm starting to agree with you for sure, for sure. And love him, hate him, say what you want about him. We also have a Bitcoin friendly president, and whether you like him or not is completely irrelevant. We stay completely objective when it comes to all this. It helps. It 100% helps. Having people in office like the new Fed chair that's going to, not the new Fed chair, but the new SEC chair, that helps. It helps ease the regulation. It helps people, that are running companies that are Bitcoin friendly. It gives them the opportunity to embrace it and utilize it without the fear of getting prosecuted or that they're breaking any laws.
Yeah,
So it's extremely exciting time.
it really is. Yeah. I mean, the only thing that really stops innovation is regulation.
Mhm.
That's it. It's red tape. As soon as the red tape comes off, innovation flows. New ideas come out. People get more creative. They can try more things.
Yeah.
The
When you
market is,
said about the internet too, the internet was actually invented in the 70s, like
yeah, that's right.
1971 or something. So it didn't come online for people to use until the 90s. So it took 20 years of work for it to even get to a point where it's available to the public. And
Yeah,
then it took another 10 years to really explode. And so if you look at Bitcoin's growth, it's faster than the internet,
it is. You're right.
faster than the internet. So, and in terms of sending information and value securely with no third party, no what's it called? No intermediaries.
Yeah,
It really gives an opportunity to send value to people digitally without permission of anybody else. And once that becomes easily accessible by the masses, and I'm talking about the masses that otherwise wouldn't go online, start an account, learn how to
right,
actually trade and do things like that.
right.
Yeah,
Man, exciting stuff here. Exciting times. Um,
definitely.
so we're at about the 30-minute mark. I want to respect everyone's time and not make too long of a video, but I did want to talk about one more thing. I know we've had some success in the fund with some of our moonshots.
Yes.
And for the people that don't know what that is, we allocate a small percentage of our portfolio to what we consider to be moonshots. So these are small cap projects. They're usually DeFi, that kind of decentralized finance. And they're projects that we think could potentially have 100x or even 1000x upside. Now, it's kind of like venture capital investing, right? If you're a venture capitalist and you've got a big fund and you want to go invest in a whole bunch of companies, going into it that most of those are not going to work out, right? No matter how exciting and how good the pitch is and how good the idea is, most are not going to work out. But some of them will hit. And the ones that hit and hit big make up for all of the others that did not hit. And that's how these firms grow and become massive. So let's talk a little bit about, maybe share with the people, like, what are some of the moonshots that you're most excited about, or that you're researching right now as potential opportunity for us to invest in through Pivotal Point.
Yeah, well, the ones that we've been doing a lot of moonshot investing on Solana, and our moonshot portfolio has actually grown significantly. And then we just funnel that into US dollars, stable coins, and just let it sit and wait for dips to invest in the better projects such as a Bitcoin, Solana, etc. So it's been going really well. And for the moonshots, the important thing is to take profits quickly, take profits early, and don't hold on to hopium that it's going to become $1 billion project, because 99 times out of 100, forget that, 99.9 times out of 100, it's not going to happen. So when we do see a spike or an increase in asset valuation, we want to obviously get our liquidity or our principal out as fast as possible and let a little bit ride. And we do that, and we like to funnel those profits back into the fund. And we do that with a very small portion, just like Austin said. So the one that we're excited about, two potential things right now. One, we've only done moonshots on Ethereum and Solana in the past, but we are working, and I got some insider info on a project that's called Mixie AI. And in my personal account outside of the fund, I was an early investor, pre-seed investor. So was Austin, and it's been being built for like a year. And in about a day or two, they're launching on the Binance Smart Chain. And we don't have experience with Binance because we've been just Ethereum, Solana, Bitcoin. But we opened a Binance platform, and we're going to be participating in this Mixie growth. And I don't want to say a whole bunch and hype it up, but what I will say about it is they've partnered with a company, and they've actually got bought out by a company called Net Capital. And Net Capital is a publicly traded company. So Mixie AI, it's an artificial intelligence blockchain gaming company. And we're excited about it because it's a legitimate project. It's not a meme coin. It's not a Hopium blockchain or anything like that. It's a legitimate project that has real world use. It was bought out by a company named Net Capital, which is a publicly traded company, like I said. And Net Capital and Mixie are working with another company called World Liberty Financial. World Liberty Financial, for those of you that may know, is was it Eric Trump or Donald Trump Jr.? That's their company, and they are a crypto fund. And what they do is they invest in a lot of crypto projects. They hold heavy Bitcoin, heavy Binance, heavy Ethereum. And I'm not 100% sure of exactly everything that they do because that's not my specialty. But in terms of what they are doing to move the space forward is gigantic. And they are moving a lot of their projects over to Binance. We haven't invested in Binance in the past. And the main reason why is because they're they're not an American
Yeah.
crypto.
Yeah. Yeah.
They're out in China, and they're
Higher risk.
yeah, a little higher risk. We can't keep an eye on everything, but they've stayed in the top four cryptos forever, and
Yeah.
they're outperforming Solana by far. They're outperforming XRP a lot of times. They're outperforming almost everybody but Ethereum and Bitcoin. And the reason why they migrated over to Binance is because of the liquidity pools are extremely deep. And just like we talked about at the beginning of this video, the more liquidity in a market, the more cash that's available to pull from that market. And Binance, with such a large pool of liquidity, as well as working with World Liberty Financial, there's a lot of opportunity there. So we're really excited about that project and where it's going to go. We're not going to be afraid to take profits, but we are going to, pay attention to that one a little more than the other moonshots that we do because of the legitimacy that is backed by it. Also, Mixie and World Liberty Financial are working to develop and introduce something called USD1. And USD1 is a stable coin that's going to be the native stable coin on the Binance ecosystem. And it's an algorithmic stable coin. And their goal is to compete with the likes of USDC and USDT, but having it start and grow from the Binance ecosystem. And I'm not going to go into the boring details right now because it's very, very complex. However, the backing that USD1 has is tremendous. It's absolutely incredible. So we're very excited about that. And we have to be a little patient because sometimes projects take a little longer to develop. But we like where that's potentially going. But again, it's a moonshot. So whether it does or doesn't, we're not quite sure 100%, but we are excited. The other thing that we're looking at is we're looking at a company, I don't want to say it right now as well, that is a high yield dividend investment company. And what they do, some of you might have heard of it, I won't say it yet, but they offer extremely high yields for companies that sell option calls and derivatives of publicly traded companies. Let's say, for example, like Facebook as an example, or Tesla. There's people on the derivatives market that sell options and futures that will go long and short these assets all the time. And they have to pay a premium to open up a contract. So this dividend yield company, what they do is they sell these option calls to investors that go long and short, and they collect premiums all day long. And those premiums are shared with their investors that own this stock. And it's a publicly traded company, buy it on Fidelity, Charles Schwab, and there's a long list of options that you could choose some. We're going to be looking at options that are in our wheelhouse that we understand not just the process, but the underlying stock that they're selling the options for. because we want to stay within our area of expertise and our circle of competence. We don't want to get confused about anything. So, but some of these yields are tremendous. I'm talking weekly yields of percentage that if I said right now on the call, you guys wouldn't believe me. I'm going to keep it very, very vague for now. And when it's released, and if we decide to take that plunge, we will share with everybody. But it could be an exciting new addition to the fund along with the moonshot portfolio that really helps put us over. And we're hoping to time that with the alt season too.
Yeah.
Yeah.
That's exciting, man. So yeah, so really, I mean, for anybody who's watching this, who's not a current investor, or maybe you are an investor and you want to add some more capital to your portfolio. I mean, this is what we do. This is what we're passionate about. You heard Corey talking about this. That's a reason I partnered with Corey, is because we're so involved and so ingrained in the crypto sphere, and we're always looking for that edge, that alpha. How can we outperform the other funds out there and just the market in general? So if anyone is interested in investing with us, Corey, where do they go? Can you tell them how to get started?
Definitely. So you can go to pivotalpointinvesting.com. Pivotalpointinvesting.com. And yes, we need to update the video that we have on there. If you see it, it doesn't even look like me at all right now. I got long hair and a beard, but and our strategy has changed since that initial video. But there's a contact us section on Pivotal Point Investing that will come to Austin and myself, and we can get in contact with you. If you're not an investor, if you are an investor and you want to add to your position, we feel it's a great time. The market is stabilized, and we're really excited about what's to come. And holding assets in funds is going to be something that's going to increase your net worth over time. And we're really excited for what's coming, and we can't wait to share those with you too. But go to our website, go to contact us. You'll be able to reach us. Austin and I will be able to reach back out to you.
Pivotalpointinvesting.com. All right. Awesome, man. It's always fun chatting with you. That was a great conversation, and
Sure.
appreciate your time.
Definitely. We'll see you guys. See you, Austin.